Today was another bad day in the stock market. Some people can see this as one of the horrible day, or some people also see this as an opportunity to buy shares of stocks or ETFs that they've been looking for. So in today's video, I'm going to give you an update and review of some of the income ETFs that have crashed massively. And also we're going to look at the market in general and 3 reasons why these ETFs and stocks have crashed today. So the first thing we're going to look here is ULTY. As you can see, ULTY today went down 13 cents or 3.23%. It stands at $3.89. It has gone below $4 it was yesterday. And if the market keeps going the way it goes, this might fall all the way to $2 by the time they do reverse split, which is going to be 1 to 10. Let's say, for example, is at $2, then a share price will be at 20 and will keep falling after that. So it looks really bad for ULTY, but hopefully ymax might do something, maybe change their strategy and reverse the course for this ETF. But as of now, it's doing really bad. The other ETFs that surprised me were TDAC and TSPY. For the past week, the market has been really bad and shaky, but these two ETFs show some resilience and they're pretty good. They did crash, but very little. But today, of course, they went down. This one 65 cents, 2.54, and this one is 41 cents, 165. So it's below 25. That's the price they started. And this is the NASDAQ, and this is S&P 500, and this has a higher yield around 16%, and this one is around 14%. So these are one of my favorite ETFs because they're pretty good, but the yield is lower. ULTY from Rex shares, it keeps falling from 25 to now 16.52. It went down 75 cents. The other ETF that went down a lot was MSST. This is from Title Trust, so it's from ymax. And this ETF is pretty much similar to MSTY, but the difference is that this one does target only 25% yield, but they use the same strategy, leverage and synthetic. That's why people get pissed, because they see their existing ETF don't do well, but they keep creating new ETFs. And as you can see, this ETF has crashed at $2.04, 4.22. So that's pretty much similar to how much MSTY went down. This ETF started trading only like a few days ago. It hasn't been out for a long time. I made a video about this ETF, and also the other ETF that went down was NVIT. This is NVIDIA. And the other ETF that came along with these ones was Tesla, TEST. So these 3 ETFs here, they're pretty much Tesla, NVDY, and MSTY. The only difference is that these 3 single stock ETFs would have a 25% target yield. So they are not going to have a huge yield. That's the only difference. But in terms of how they write their calls, they literally use synthetic. So I don't even know why ymax has created these 3 ETFs where they're going to have the same strategy. Biggie, Renty, and Soxy ETFs also have similar target of 25%, but they're different. Those 3 ETFs have some direct exposure and some synthetic, and they are not single stock ETFs. They are funds. They are a whole bunch of stocks in them. So it's different. I still don't know why they have these 3 ETFs. All right, the other 2 ETFs that went down a lot were HOI. This is ymax Robinhood, went down 5.31, almost 10%, and MSTY went down 34 cents or 4.63%, close to 5%, pretty much very closer to strategy stock itself. And the price right now of MSTY is at 706. So this is the lowest it has ever been. So whether MSTY or ULTY will recover, that will all depend on how the market performs. And in case of MSTY, will all depend on coin and also a strategy stock itself. In general, stock markets were all down today. We can see here Dow was down, S&P 500 was down 1.56%, Russell was down 1.82%. The worst was the NASDAQ, a fall about 2.15. And of course, NASDAQ would fall more because majority of the stocks that went down a lot were tech-heavy stocks. Finally, let me show you the 3 reasons why the market went down, because knowing the reason is very important so you know exactly what to expect going forward. The stock market decline on November 20th, which is today, was driven by a concern over artificial intelligence, AI evaluations, and doubt about a Federal Reserve interest rate cut, which ultimately erased earlier gains. Key factors in the market fall include concern over AI bubble. Despite strong earnings from Nvidia, investors remain skeptical about whether the returns from AI investment could justify high valuations, leading to a major sell-off in the technology stocks. Reason number 2 was fading hopes for interest rate cuts. Hopes for a December rate cut from the Federal Reserve faded, and investors questioned the amount of support they could expect from their monetary policies in the short term, contributing to the market anxiety. Reason number 3 was heavy sell-off in the market leaders. Major US indices saw sharp losses, especially hitting top-performing tech stocks like Nvidia, which had previously driven the market momentum. So these are the main reasons why stock market crashed today. And now you know there's no really big thing like earning or anything like that. So it's more of investor sentiment, and there's a fear in the market right now. That's why the stock market has crashed. So if you are an investor who have hope, you see all these concerns are just something that not a huge concern to you, then it could be an opportunity for you to buy some shares. But if you feel this is a real concern to you, then you might want to wait till the market returns to normalcy. So that's all I have for today, guys. If you like this type of content, as always, smash the like button. And don't forget to subscribe so you can always receive important updates, and share with someone you love so this video can help them too. Thank you very much for watching. I'll catch you in the next video. Bye bye.